as we get closer to the holidays, I always like to go over the year's biggest winners to hunt for stocks that might be able to repeat that performance once the calendar flips to 2023. This year's pretty straightforward because when you break down the market into its 11 big sectors, only a couple are up at all. Most of those have barely done anything year to date. The only exception is energy, which we talked about last night, and I still like. I love the energy bounce today. While the energy sector gained 56%, the next best performer comes in a very distant second. I'm talking about a group that I don't talk about much, but I do have them on a lot. That's the utilities. With the XLU, the S&P Utilities ETF is up only 1.5%. Of course, that's pretty darn good when you consider this has been an awful year for the averages. Dow off roughly 6%, S&P down 15% for the year. But honestly, the utilities are exactly what's supposed to work in an environment where Wall Street's terrified of a Fed-mandated recession. These are steady Eddie companies that keep putting up the same solid numbers whether the economy's good or bad. And they also tend to protect you with bountiful dividends that can cushion any potential downside, which is why I constantly put them on Mad Money. Why not? I'm trying to get it so everybody has a good portfolio, including some with dividends that you reinvest. That said, when you drill down into the individual utilities, not all of them are boring yield plays. There are some great growth stories in this industry, and one that can deliver massively outperform the rest of the group. We've got a bunch of forward-thinking utilities that are building out cleaner sources of electricity like wind, solar, and nuclear, all of which got big handouts when Congress passed the so-called Inflation Reduction Act. Remember, despite the name, this was actually a massive climate bill. And that's been usually positive for their stocks. So can the utilities keep winning next year? Depends on what you see happening in the broader economy. If you think the Fed will keep bringing the pain,
the house of pain,
aggressively in order to tamp down on inflation, the utilities should do great. They're a textbook recession-proof cohort. But if you look at a cooler than expected CPI number today and the figure the Fed might not have to do as much damage to the economy, then the utility stocks might fall out of favor next year, simply because there'll be better opportunities elsewhere. Right now, they really don't have much competition, except for maybe the 2-year Treasury, but that can change if we avoid a harsh recession. However, some of these are special situations that should be able to keep winning regardless. Let's take the best performance one by one. The top performing utility, I'm going to go over here because I think it's really cool, is Constellation Energy. That's a nuclear-powered electric utility that we just had on the show last night. Well, the stock that's up, can you believe it's up 82%? It's utility, since it's been trading independently. Now, I've been recommending this one since March because I'm a big believer in nukes, nuclear power. It is our best option for carbon-free energy production in a reasonable time frame.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.